You're into copy trading, right? But ask yourself honest question. Has ever copy trading failed you? And when you saw those wonderfully successful trading signals or copy trading providers that gave you or supposedly gave you 100% per week or 10,000% per year, had they actually ever made you any money? Well, here's the hard truth. In 99% of the cases, all these fancy returns actually yields losses to people who are actually following them, and maybe just ones who are actually selling them are making any profit. But here's the thing, if this is done right, there is actually some opportunities to make money, because there indeed are few traders who actually make money. But of course, what's the million-dollar question? Million-dollar question is to find those few successful traders. And here in this video, I'll help you to show how to turn this sad alley, which is called copy trading, to something really successful. So let's go to trading platforms and see how we could actually separate absolute scams for particularly good traders. So let's roll on. Alright traders, now we are at Vantage Markets, and if you are looking at Vantage Markets dashboard, we will go to copy trading and open Copier. When we are open Copier platform, dashboard looks something like this. And what does rookie traders typically do? Rookie traders actually work very bluntly simple. They go to where? They go to section highest annual return, and then they see returns of 30,000 per year. No, 308,000% per year, or 224,000 per year, or nearly 200,000% per year. Something completely ridiculous like this. Now let's do some quick evaluation and see how those 300,000%, that's ridiculous number, actually have been made. So for instance, let's open this trader. Let's see how he has done it. So first things first, what we see, let's open 360-day return. So here we see 308,000% and maximum monthly return 21,764.8%, which is ridiculous. But if we see closer, he actually had traded for 4 months and he did most of his returns in just 1 month. So this is how he actually have done it. He had made very short-term performance with extremely high returns. And let's see whether he has any drawdowns. Data says he has no drawdowns, and he has 0 drawdowns in absolute terms. And if we look at daily, monthly and yearly charts, he also doesn't have any drawdowns. And he had aggressively traded probably gold, which looks like, yes, it's accounted for 98% of the trades. Well, this looks suspiciously good, because also he has 606 trades per week, and this is too good to be true. So what I could recommend, like invest like minimum amount of money. Like if you can invest like $10 or 10 euros with this trader, you might see how he actually performs. But this is something too good to be true, so I would ignore these kinds of returns. But let's dig deeper and let's see other high return traders and what they have gathered. So next one is, let's go to Axis Gold and see how Axis Gold have performed. He also has traded only for what, couple of weeks? January, February, March. Yes, we have like 2-month trading return. And if we go for like 360 days, he has 33.7% drawdown within that time period. And also, he evened out this return in monthly and yearly basis, which also seems ridiculously good. But maybe they are simply leveraging up gold trades, and gold has been phenomenally successful in past year. And maybe this is the reason, I don't know. But also, average holding time is 0 hours, so he is scalping and he has 424 trades per week. Well, this is simply too good to be true. So avoid these types of traders and look for something more, I would say, robust. How you can actually see something more robust? Well, you don't have to go for returns, because returns are extremely skewed for traders who make extremely aggressive risk bets with very good markets. So in 1 month probably they will make these kinds of returns, and in a couple of months ahead they might have 99% of the drawdown. So what's actually slightly smarter. Slightly smarter is to go for traders which are characterized by risk band, not returns. So that means you will make lower returns and your performance will be somehow more manageable. Let's see if this actually works. So we have traders now with way lower percentages of returns, but still they are in absolute terms high, much higher than general stock market indices. And let's simply go randomly and explore this kind of trader. And let's see. He works in this chart since September, and he could see that he has, I would say, more realistic returns. One good profitable month in September, then slight losses in next 2 months, and then he actually made 60% returns in December and January. And then February also is sort of break-even month. Supposedly his maximum return is 0.1%, and that's corrected by 50% drawdown in 1 year period. So this is something more, I would say, realistic, but still 50% drawdown in 1 day is way too large. So this actually looks by the returns more reasonable, but still this means his strategy is quite dangerous because he has strategy which employs 50% drawdown. That's way too much. And 80% win rate means he probably trades with very small risk rewards. So this also is, I would say, quite risky. He trades only 1 trade per week and he holds for quite a long time his trades. So actually there are a lot of questions that also need to be asked, but this is how more, I would say, balanced trading looks like. Let's go for traders who have, I would say, a lot of copiers. That means they have following and they have trust. Let's see how actually they would look like. So here is the trader who trades on Bitcoin and gold, and let's go for 360 days. He has traded since November, also only 5 months of trading, but still all 5 months are profitable. Return is sort of good. Drawdowns are sort of low, and only also 1 drawdown day with 21%, which is even out by monthly and yearly basis. But that's understandable because he only trades for 5 months. So this actually also could be trader who is sort of good, sort of one who you could consider comparing to high performance traders, but still 21% daily returns might have some red flags. But this is one you could actually put to the watch list. You find 20 of these traders and you have some interesting, I would say, prospects, because if you could even out these types of traders, some of them will lose money, some of them will make money, and I could probably bet that you might have some good strategy overall. So this is something you could actually save and search for, I would say, more depth. So here I gave you a quick example. I showed you why traders are losing money when they are using copy trading signals or copying for other traders, because they are jumping for traders with highest returns and they are simply looking at short-term extreme success and neglecting potential risks. Then those high percentage traders might wipe out your capital in one bad trade. So what you have to look instead is look for more even traders with more balanced long-term track record, which is also always mitigating between high profits and manageable losses, and traders who have long, large following. That means these signals actually have made money for their providers and they have people who trust. This is more important aspect than only returns. Question is what to do if you want to follow something like that. I actually have stacked up a list of traders who have pretty good track record and they are consistent with good following. So that means if you are following a bunch of these traders, you might actually have pretty diversified portfolio of good traders, which could even out your losses and volatility and make money at the end. So here's what to do. Join Vantage Markets by the link below, because we are using Vantage Markets to find these traders. Write me on Telegram. Then in Telegram I will hook up you with these potentially good traders which has good track record, and we will make money together. This all is free because I make cut out of traders' profits. So that means if trader makes money, you make money, and I make cut of it. This is the business model I have chosen, and I would say this is very open-minded and democratic for all of the parties. I'm not asking for some courses, for some back-end fees or something like that. When we make money, we make money all together. When we are losing money, all of us are losing money. This is the way it works, and I think this is the best way how to cooperate between copy providers, traders, and people who want to make money in financial markets. So write me, join Vantage Markets, and let's make money together.